and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Fidreach Solutions has raised 21.9 crore rupees in fresh funding led by Colossa Ventures along with existing backers Michael and Susan Dell Foundation, Omidyar Network and Caspian's SME Impact Fund. The new capital will help Fidreach scale operations and strengthen its risk and technology platform to accelerate credit guarantee facilitation at speed and scale. Fade Beauty has raised 17 crore rupees in a fresh funding round led by Spring Marketing Capital with participation from Titan Capital Winners Fund and others. The fresh capital will be used to accelerate product innovation, launch new face-focused categories and expand its omni-channel. SBI Ventures intends to raise 2,000 crore rupees for its third climate-focused fund to invest in early and growth-stage climate startups, particularly in frontier climate technologies and AI-enabled climate innovations. Rapido has seen its GMV grow 111% on an annual basis as of September 2025. According to its investor process, Rapido's annualized GMV as of March 2025 was 133%. Process doubled its shareholding in Rapido, picking up an additional 5% stake that was previously held by Swiggy. YouTube, Facebook and Instagram have introduced tools enabling users to tag content as AI generated or modified. This move aligns with the draft amendments proposed by MeitY that aim to tackle the issue of AI-based deepfakes by requiring users to declare AI generated content and urging platforms to verify such content. Those were the headlines that we're tracking for you this evening, but our top story today, India's new labour codes makes minimum wage a universal right for every worker. The central government will fix the floor wage, which may differ across geographies, but allows states to fix the minimum wage. The code also mandates gratuity for fixed-term employees after they complete a year. Gig workers get legal recognition. Shilpa Rani Petha joins us now with more on what these rules mean for India's gig economy. Shilpa?
Well, these new labor codes, for the first time, they give all those who deliver our food, our online orders, and drive our cabs a formal worker status. Now, a gig worker has been defined for the first time as anyone working outside a traditional employer-employee setup, and a platform worker is someone who provides a service via an online app. Now, formally coming under the Code of Social Security, gig and platform workers will get life, accidental, and disability insurance, health cover, and maternity benefits, old age protection or pension, and a lot more. Now, they will also receive an Aadhaar-linked universal account number, which will allow them to access welfare benefits irrespective of which state they are in, removing the issue of migration as well. Now, a dedicated social security fund that will be financed by the governments, platform companies, and CSR contributions will be supporting these schemes. Now, this brings in a big change for platforms with a mandatory contribution of 1 to 2% of their annual turnover to the Social Security Fund, and it's capped at 5% of payouts that are made to these workers. Now, analysts estimate that this could increase costs for the like of Swiggy and Eternal by anywhere between 2 to 3 rupees per order, with an incremental burden of about 150 to 200 crores on their GMV. Now, Eternal and Swiggy already provide benefits worth around 1% of their revenue. Now, from Swiggy to Eternal to Uber, Amazon, others, all of them have welcomed these changes. Both Swiggy and Eternal say that they don't expect any material long-term financial impact and are strengthening their internal systems for compliance. Online shopping apps like Amazon and Flipkart are also evaluating changes required, and all these companies are engaging with the government as the final rules are drafted. Now, remember, what are all these companies? It covers all the major platforms: Swiggy, Eternal, Zepto, Amazon, Flipkart, Urban Company, Ola, Uber, Rapido, every other online ordering platform that you and I use. Now, analysts expect that these companies will pass on most or all of the cost to us consumers because they're already working with very stretched thin margins. So this could mean a slight 2 to 3% increase per online order that we make, and this will likely be added to an existing platform or handling or convenience fee going forward. But this will go towards giving a much needed social security benefits to the 40 crore plus gig workers that we depend on almost every day. Back to you.
Thank you for those details, Shilpa. Appreciate you joining us. Moving on, Wealthy, a wealth tech platform for mutual fund distributors and wealth management professionals, has raised 130 crore rupees in a Series B round led by Bertelsmann India Investments. The Bengaluru-based startup is betting big on AI to supercharge India's mutual fund distributors, from cutting onboarding time to 2 minutes to giving advisors institutional-grade tools and insights. With AUM soaring from 200 crore rupees to 5,000 crore rupees in just 3 years and a network of 6,000 distributors across 1,000 towns, Wealthy now wants to onboard 50,000 partners and hit 1 lakh crore rupees in AUM. To tell us how, joining me now is Prashant Gupta, the co-founder of Wealthy. Prashant, welcome to Startup Street. Like I just mentioned, your AUM has grown from 200 crores to 5,000 crores in just 3 years. What's driving this acceleration? And in a landscape filled with execution platforms, advisory platforms, brokerage apps, where does Wealthy position itself? What is your moat?
Thanks, Shruti and Arundhati, for inviting. So we are building the operating system for India's MFDs, bringing institutional-grade wealth tools straight into their hands. That's why about 6,000 plus partners across 1,000 towns already run on Wealthy. We are not competing with brokerage apps and DIY platforms.
So let's talk about the fundraise then, Prashant. What does this 130 crore rupee round unlock for Wealthy at this stage of your journey? What are your top deployment priorities?
So we're doubling down on 3 areas. One is AI-driven tools and workflows, deeper expansion into tier 2 and beyond, and powerful multi-product stack that lets MFD operate like top private bank RM.
Okay. Mutual fund AUM stands at 75 lakh crore rupees, yet we have only 5 crore investors, Prashant. What is holding back retail participation? And you work with over 6,000 distributors across 1,000 towns. So what gaps do they report from the ground?
So the biggest gap in India is trusted advice. Right? Most investors lack confidence to start and confidence to stay on track. And that usually comes down to low awareness of asset allocation and risk. That's the core gap the MFD solves, and we are solving together with them.
All right, Wealthy offers, like you mentioned, a full 360-degree platform across mutual funds, equities, bonds, PMS, AIFs, insurance. You've said that technology alone can't solve the advice gap. So how do you combine human trust and AI meaningfully? And if you could give us examples of how AI is making distributors smarter and more proactive.
Sure. So, as I said, tech can't replace trust, but it can upgrade it. So, for example, client onboarding, which used to take days, can be done in 2 minutes. That's the power of tech. Another example, a proper portfolio review used to take weeks just to collect prospect clients' data, another 4-5 hours to stitch all of it together, which a tech-led workflow and AI, that review can now be more precise, instant, and proactive, right? It makes MFD faster, sharper, and more consistent across clients.
And if you can also throw some light on the risk tracking ability.
Right. So, the data that the MFD gets from the client, that also enables him to give the platform to give tools to give prompts to the MFD to be able to take proactive measures rather than reactive measures, which has been traditionally the case.
Okay. Again, like I mentioned in my introduction, you're targeting 50,000 distributors and 1 lakh crore rupees in AUM. What does it take to build this scale, Prashant? Earlier you mentioned expansion into tier 2 and tier 3 market is a big part of your plan. Walk us through that strategy as well.
So AUM is a function of is an outcome. So input really is the number of MFDs that trust us, right? So we already onboard about 350 MFDs per month, and we train most of them. The next milestone is to onboard about 1,000 MFDs a month, and the most of that growth will come from tier 2 and beyond towns, where demand is exploding and the MFD supply is still very thin.
Sure. And how different is this market, as compared to the metros? What is the playbook at the tier 2 and tier 3 market level that you have?
So compared to metros in tier 2 and beyond, you have to actually create the advisor or the MFD supply. So you have to actually onboard them, train them, get them certified, handhold them in the early years, and it takes some patience in the beginning to build. But that's what we have been doing for the past 3.5 years, and now we have a playbook to do that in multiple geographies as well.
All right. Prashant, RBI data shows that 4.66 lakh crore rupee, net inflows into equity mutual funds in FY25, which is pretty much 7x growth in 5 years. What structural tailwinds are you banking on?
So financialization in India is accelerating, right? So incomes are rising, digital rails like Aadhaar and UPI do help make everything faster and more reliable. Mutual fund assets are growing at around 15% per year, but assets managed by MFD are growing at 30% a year, right? So, and MFDs with wealthy tech stack and the platform are scaling nearly 60% year on year, far ahead of the industry, right? So these are the structural tailwinds that we see, which we foresee in the next coming decade as well.
Okay. Prashant, with less than 15% of households invested in equities today, how do you see this number a decade from now?
So developed markets are at about 50 plus participation, whichever market you take. India is still just at, as you said, 10 to 15%. In a decade, we see India doubling, or if not tripling that number. We're still at a very, very early stage in wealth creation cycle. But we foresee about doubling of that number to tripling of that number, which makes it about 10% to 15% now to about 20 to 30%, or maybe about 30 to 40% in the next decade.
All right, Prashant, before I let you go, one final question. If you could take me through your current growth plans, what's immediate, in terms of expansion?
So we are currently in about 20 cities. So we would, which includes the metros and tier 1, we would, and some tier 2. So we would go from geographical expansion wise, we will go to tier 2 and beyond. So we will add another 10 to 15 cities in the next couple of quarters, where our presence will be expanded, and we will onboard new MFDs, train them, and go to the market in those cities. Second would be strengthening our multi-product platform from investments and insurance and broking as well. So making it more robust and scalable for the MFDs to be able to offer to the clients.
All right. Wish you the very best with all these growth plans that you just mentioned. Many thanks, Prashant, for joining us on Startup Street today.
Thank you. Thanks a lot.
All right, and moving on, Agraga, India's digital freight forwarder rebuilding the cross-border logistics stack for MSMEs and enterprises, has raised 100 crore rupees in a pre-Series B round led by Bajaj Finserv. The company plans to deploy the capital towards expanding its LCL vertical, deepening its automation and real-time visibility tech, and scaling across major export hubs. With over 700 customers and 1,000 vendors already on its platform, Agraga says this funding will help them accelerate adoption among smaller exporters and push India's trade ecosystems towards greater transparency and digitization. So joining me now to discuss this further is Venkatesh Narayanaswamy, the co-founder and CEO of Agraga. Thank you so much for joining us on the show today. Like I mentioned, you're a digital freight forwarder in an industry that has been historically fragmented and highly manual, right? So if you could sort of take us through how you're simplifying cross-border trade for Indian exporters, what are the core solutions you offer across discovery, tracking, execution, and financial services?
First, thank you for having me on the show. One of the key things that has happened in the B2B cross-border trade is that it's a very fragmented piece with multiple moving parts in the entire ecosystem. Our focus is to ensure that we are moving towards delayering the existing fragmented piece by working with asset holders rather than intermediaries, creating a layer where there is complete transparency in the supply chain, and the MSME exporters have complete control over what's moving, and they have the visibility and transparency towards what's moving across the supply chain from the factory of theirs until it reaches their customers. That's what's really creating.
Sure. Yeah, and congratulations on the 100 crores that you've raised, right? How will this round sort of accelerate the adoption among MSME exporters who continue to face, cost, compliance, and multi-intermediary challenges? Where else will the capital be deployed?
So one of the key aspects is building the technology stack. We are ensuring that there is a much deepening of our supply ecosystem, not only in India but in international geographies, that enables us to be giving access to customers to a much larger ecosystem than what they have today. The second is the complete capability on technology that has created a layer where they are able to discover the solution, both the movement of cargo as well as the price in currently probably 2 minutes. Earlier in the traditional ecosystem, it could take anywhere between 48 to 72 hours. And this has really enabled them to push forward in terms of building the trade and access to global markets with a lot more ease.
All right, and you're also looking to expand your LCL vertical, and that's a big focus area for you. So what tech upgrades, automation capabilities, or real-time visibility features can, your customers sort of expect over the next 12 to 18 months?
So LCL is a little bit more complex, and I think one of the reasons that we have deep dived on LCL is that the small customers do not have enough volumes to move a full container. The LCL enables them to be cost effective when they ship globally across multiple geographies. The ability to aggregate demand across a large funnel of customers, small customers in tier 2, tier 3 cities, is what we are able to build. We are able to give small customers enterprise level logistics solutions which they otherwise are unable to access, and that's what creates a significant impact through the LCL vertical. What we have done is creating an ecosystem where we are able to optimize routes, optimize pricing based on real-time API integrations with all the supply ecosystem that we work with, and that's what's democratized the entire supply chain for these small exporters. They are really underserved, and that's what they don't have access to.
All right, and you've grown to 700 customers and 1,000 vendors across 40 geographies, right? So what does this mean for your revenue run rate? If you could take us through the kind of revenues you're clocking and where you sort of hope to exit this year and what the next 1 year plan is.
So I think at the exit of this year, we should be clocking around 200 crores in annual revenue. That's probably a 75% growth over what we had last year. Over the next 12 to 18 months, we believe that there would be a 150% growth in our overall revenue or the annual run rate. And we believe that the deepening of access to customers across tier 2, tier 3 towns and ensuring that there's a large funnel is going to create this impact.
Right, and demand for organized tech-led logistics solutions is rising across India's export hubs, right? Like you said, they're underserved and they need these services. If you could walk us through your current presence and which geographies or trade lanes you're prioritizing for the next phase of growth, because you're looking to enter more areas within India itself, right?
So we started off with US being a primary focus. It was the largest trading partner on the export leg of the business. We believe that going forward, we are expanding into around 12 geographies in Europe. We will be accessing the Middle East across 4 countries, and then further expanding into South America and Africa. These are the projected trading lanes that we intend to develop. But we also intend to making sure that we further accelerate growth in the existing geographies that we have.
Sure, so you're looking at a lot of geographies there. What's the revenue mix at this point? Which is your best performing geography, and where does sort of India lie in your plans for the next 1 year?
So India will continue to remain a focus. I think there's a lot of power between, there's a lot of backing by the government, especially for the MSMEs to propel the export story that India has. India is expected to reach $1 trillion in exports over the next 4 or 5 years, and I think MSME is going to be at the heart of the entire growth story. Obviously powered by the government initiatives like one region, one product, all of that happening. And the doubling down on US and Europe is where we believe consumer markets are going to grow for the Indian MSMEs. Also backed by some of these global marketplaces like Amazon, Walmart, eBay, creating that kind of infrastructure for the Indian exporters to reach global markets.
All right, and Venkatesh, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much.
All right, with that, it's time for us to head into a short break. But up next, Unified Data Platform CtrlB has secured $2.5 million in seed funding led by CtrlB Ventures. We put the firm's co-founder and CEO Adarsh Shrivastava on the hot seat to know more about the firm's fund allocation and growth plans. Stay tuned.
Unified Data Platform CtrlB has secured $2.5 million in a seed funding round led by CtrlB Ventures. Founded in 2023, the company builds a platform that helps businesses understand what's happening inside their complex apps and systems, something which is known as observability. Now, as online services grow, companies collect huge amounts of data to keep things running smoothly, but storing and searching through all of this information has been slow and expensive. Now, CtrlB says it has developed a faster and far more affordable way to handle this data. With this new funding, it plans to grow its team, expand in India and the US, and strengthen its technology. For more on the company's plans ahead, joining me now is Adarsh Shrivastava, the co-founder and CEO of CtrlB. Adarsh, thank you so much for your time here. For our viewers to just understand what you do in simple terms, what everyday problem does CtrlB solve for companies that are running large digital systems?
Sure. So what happens is that whenever any company has a digital infrastructure, be it servers, be it they're hosting an application, or they're doing e-commerce sort of fintech, the problem that gets in their way is no matter how good a software is written, it always has bugs. And whenever things are in production and actual users are using the software or the application or the tool, it tends to break down. Now, whenever this happens, it is called an incident. And whenever an incident report is raised, a developer usually gets a page or a call on their cell phone, and then they have to leave everything that they're doing and go back and solve the issue that has happened, which causes a lot of loss of productivity, which in turn causes a loss of revenue for companies. So in general, for enterprises, every minute of downtime or every minute that an incident is going on costs them around $5,000 to $10,000 depending on the size and the nature of the incident. So what CtrlB's mission is to help these developers cut down the time that they have to spend trying to understand what went wrong.
Well, you claim companies can cut observability spending by up to 80%. How exactly does your platform enable these savings, and how big is the cost burden for large enterprises today?
Yes, so large companies, they spend close to 30 to 40% of their entire cloud budget on observability, which amounts to a lot because these companies have more than $1 million, $5 million, $10 million of yearly cloud spend, and 30 to 40% amounts to a lot of money. What CtrlB does is that it reinvents the way the data is stored, processed, and queried, which helps in this drastic cost reduction. And we are also filing for the patent on the same technology that we have built.
Well, let's get to that funding then. How exactly are you going to utilize this $2.5 million seed funding that you raised for the growth of the company?
Yes, so right now the main focus is to strengthen the R&D because, as I mentioned, our goal is to cut down the cost without sacrificing on the speed that the developers experience when they're using the platform. So that involves a lot of R&D. And so I think majority of chunk will go in R&D, hiring new developers. And then I think some portion will also go in our US GTM, wherein we would also like to expand the market in US where the problem is much more severe.
You're targeting more than 50 enterprise customers in the next 18 months across India and the US. What is your acquisition strategy, and which sectors are proving to be the fastest adopters?
So what I've seen so far in my journey is that the finance sector as well as the internet commerce sector is the biggest beneficiary of softwares like these because they generate terabytes to petabytes of data daily, and hence their costs are usually very high. Be it Flipkart, be it Walmart, and other fintech players like Shrivastava. They spend a lot of money in storing these telemetry and observability data. So, and the primary acquisition channel that we are going for is right now founder-led because you need to come from a position of trust in order to sell such a critical tool because CtrlB forms a very crucial part of their infrastructure. And then we are also talking to a couple of channel partners that can help expand the reach of our funnel.
Well, Adarsh, your platform talks about high-speed ingestion and extreme compression. How defensible is this technology, and how important are these patents you were talking about in building a long-term moat for the company?
Yes, so the patents are pretty unique to us, and what we are trying to do is build defensibility against the other players in the market, and we have taken our steps to ensure that that defensibility remains. And we have our own compression algorithm that helps compress data up to 200x, whereas the current market standard is anywhere from 70 times to 100 times, whereas we are sitting at 200 times. So that is something unique to us. And then we also have our own indexing engine, which can sort of index large chunks of data and then compress it into just a few gigabytes of inverted indexes, which again helps companies get way faster search.
Well, finally, long term, do you plan to evolve into a full stack observability and security cloud? And what does that roadmap really look like? And secondly, how do you see revenue scaling as you move into these adjacent markets too?
Sure. So I'll first answer the revenue question. So what we have seen is that enterprises, it's far more easier to sell to enterprises because the pain point there is much bigger. And each enterprise we close gets us around 50 to 100K in ARR. So we see the revenue scaling exponentially within the next 1 year.
All right, Adarsh, we'll leave it at that. Thank you so much for your time here today. It was a pleasure having you on Startup Street.
Thank you, Rito. Nice talking to you guys.